Hello, everybody, and welcome to our show today. So today we're talking about something most people know nothing about, which is actually your bank credit score. There's actually three types of credit that you have as a business owner. You have consumer credit, you have commercial credit, and then you also have bank credit. Now, bank credit basically really outlines how much money you're able to get from the banking system when you go to get money from a big bank. So by the end of this actual video, you're going to know exactly what it takes to be able to have the best opportunity to get financing from conventional lenders. For those that don't know me, my name is Ty Crandall. I'm actually the CEO here at CreditSuite. And at CreditSuite, this is what we do. We help you get capital for your business. And we do it by helping you improve your fundability, by understanding things like how your bank credit score works, by building business credit for your EIN that's not linked to your personal social, and by accessing all loans and credit lines in one place. So if we can help you along the way, feel free to reach out to us, 877-600-2487, or email us info@creditsuite.com. So look, we all know that it's very important that you have a business bank account set up. It separates your personal and business banking. It's really necessary to run any kind of successful business. Okay, it's really one of the main tools that you're going to use. It helps you maintain accurate records, it helps you prepare reports that you're going to need for accountants, helps you make deposits and withdrawals, wire transfers, issue checks, and a lot more benefits. So it also lessens tax headaches. Okay, by separating your business and your personal liabilities, then it makes it easier for your tax professionals to do what they need to do, and it keeps you from accidentally commingling funds as well. Plus, you can accept debit cards, credit cards, all these type of things when you have a bank account for that money to go into. So it just makes it easier to accept payments from your customers as well. Now, business bank accounts have a little bit more lenient fees than what you're going to find on the personal account side. So, for example, fees may be waived when you use online banking. Okay, and your banking relationship that you establish with a conventional bank can also help you get more bank loans as well. And it also helps where you can handle your business bank account information with a possible lender, because a lot of lending nowadays, especially what we're calling artificial intelligence lending, where they're tapping right into your bank account to get information to make lending decisions, is all based on your ability to have a business bank account set up. But it also goes beyond just your personal and business credit scores. We're going to talk about today this third kind of score, this bank credit score that you're going to want to know. So a business bank should also act as a trusted advisor. They're there when you need them for all different kinds of things, okay, other than just loans. They're also going to help you understand some of the basics of running a business and the financial aspects of that as well. And a lot of banks have these niches in particular industries that they may work with you better than other industries. So one of the first things you want to do when you set up your business is set up a business bank account. I've got training on our YouTube channel, youtube.com/CreditSuite, on exactly how to go about doing this. And it becomes very, very, very important to be able to do this because, again, what happens is if you have a change in ownership in your business, then they can ultimately look at the bank account start date as the date the business actually was founded. So there's a lot of reasons that you want to open this business bank account, but I always say that when you're setting up a business, you should set up the entity, get your EIN, and then you should set up your bank account. Really should be the next thing that you do. So as I mentioned, that bank account start date is an important date because a lot of lenders will use it to determine when your business actually was established, especially if you have a change in ownership. And this happens because people buy shelf corporations. So don't even think about spending thousands of dollars for shelf corporations to try to fool lenders and credit issuers to believe that you've been open longer than you have, because when they see a change of ownership which shows up on your actual company's history on your business credit reports, then they're automatically going to default by this bank account start date because really shelf corporations aren't sold with a bank account attached to them. So it used to be that lenders, again, would go by the incorporation date, but because of these shelf corporations, now this date becomes so much more important. So for fraud purposes, you really got to make sure that you have this business bank account set up. So you've got to provide several items when setting up the business bank account. They're going to ask for your entity papers. They're going to ask for your actual complete application, proof of your EIN, your ID. They're also going to ask for your social. It's a new regulation in the United States as of 2018 that anybody opening an account for you that's with the bank must verify your identity by your social security number. So it becomes very important that you actually come in and that you supply that information. A lot of people ask me that for personal guarantee reasons. Why do I have to supply my social? Well, the government does that for money laundering purposes. They want to know the actual person behind the business. Because as you can imagine, when that wasn't verified, then people are opening up businesses to launder all kinds of money where it's not linked back to them individually. And you're also going to need about $25 to $200 to get that business bank account set up. So you're going to want to set up your bank account the right way to make it easy to get financing in the future. That means all your company information, your name, name, your phone number, your EIN, all that must be exactly the same on your bank statements as where they are other places. This will trigger a fraud alert if it's not. If you send bank statements in for review and the address, the name, the phone number you put on the business loan application is different than what's on the business bank account, that is really an easy way to get a loan declined. Okay, we call this fundability. There's over 125 factors that tie into your fundability or your ability to get financing, and that is definitely one of them, is that these match on your bank statements and everywhere else you're going to get. You also, of course, should avoid any kind of PO boxes and UPS addresses. That just doesn't make you look credible. So avoid that from the beginning in setting up your business, and that way you're not using those on your bank statements either. Have your phone number set up, your fax number, your toll free. All those are more fundability reasons or more fundability aspects that you want to make sure you have right to have the best chance of getting financing for the business. And then you got to make sure, again, all that matches with what you're giving the bank, including your EIN number. So your phone number should be listed with 411 as well. Okay, a lot of businesses are not going to be considered for financing unless you do these things, including that 411 listing. And if you can't find what you need, the lender can't find what they need, then they simply deny the application. Meaning that we see this happen all the time. One of the biggest reasons that loan applications get denied is that the information on the application doesn't match exactly what the lender finds in searches like the Secretary of State. And if there's a discrepancy there, then they tend to just deny the application versus doing anything else. Now, most banks require you go into the bank to set up a new account. I really haven't found any that will let you do this virtually. And again, that's because of fraud, money laundering. There's a lot of reasons they now require you to physically go in. And then they're going to typically let you leave with a folder of documents that outline all different kinds of terms that the bank has. And they're also going to give you temporary checks for that account as well. Now, they will have a service they recommend for checks. Last time I was in there, it was $200 was the minimum that they wanted to charge me to get checks. So nowadays, you're better off just to go avoid the starter kit they try to sell you, avoid getting checks from them, and go to a Staples or an Office Depot to be able to get this set up instead. Now, a starter kit that the bank is typically going to give you has all these things: a binder, deposit bag, company seal, other perks. But again, you don't really need any of this, and this is why I don't recommend that you pay for any of that, because when you're starting a business, every penny you have counts. So you don't want to dedicate a bunch of money to things that don't really matter. And you can order most of what you need, again, online much cheaper, including the checks. So if you are going to order checks from the bank, do it as minimum as possible. But my banker now even says don't even order from their service, because their service is just their prices are higher and higher and higher. And the reason for that is because so many people are going to other alternative options instead. So let's talk about these bank credit scores that I mentioned in the beginning. These bank credit scores are going to determine ultimately how lendable you are in the banking system. So that means if you go into Regions or Bank of America or Chase or Wells Fargo, the bank credit score is an internal rating that they have to determine how much you're going to be able to actually get from them, borrow from them, or your banking system. So it's the total amount of borrowing capacity a business can get from the banking system, and then they're giving this to you in a bank rating. Okay, and that bank rating will determine ultimately how much money that bank may give you. Okay, so a business can get more money if you have a minimum of one bank reference, and this is often asked for when you build business credit. They're not going to verify your bank account when you build business credit, but they will ask you for an actual bank reference. That becomes very important. Okay, and on top of that, an average daily account balance of over $10,000 or more if you're going to go get an SBA loan. This doesn't matter if you're getting most kind of alternative financing, or doesn't matter if you're getting credit cards, but it does matter if you are going into a bank to get money, and that balance is going to want to have in your account for the last 3 months. I'm going to show you more about how this works in just a minute. So bank rating is based on many factors, as you're going to find out about here. But again, one of the main factors is how much money you've had in the bank account over the last 90 days. Okay, if you have 10,000 in the bank account or more, it nets you what's called a low 5 rating. And I'll show you these ratings here in just a minute. There's low 5, mid 5, high 5, low 4, mid 4, high 4, and the lendable, the bare minimum to get money from the banking system, is a low 5 rating. So again, you're going to want to be able to have 10,000 in the account or more. Anything below that is going to give you a rating that just won't work, and I'll show you that in just a minute. Now again, the rating is most point the average of what you keep in the bank account over the last 90 days. So if you're going to get an SBA loan, this becomes really important. You want to make sure you have the right amount of money in your bank account, or you're not going to get approved. So anything in the 4s, low 4, mid 4, and high 4, makes you unlendable with SBA, which means if you have less than $10,000 in your bank account on average over the last 90 days, well, you're not going to get an SBA loan. If you want the bare minimum to get an SBA loan, you got to have a low balance of a balance at least of 10,000 or higher, 10,000 to 39,000. A mid 5 rating gives you a 40,000 to 69,000 in average money in your bank account over 90 days. And the highest bank rating you can get means you're averaging $70,000 in your bank account over the last 90 days. If you're going to get any kind of alternative financing, if you're going to get credit cards, this stuff just does not matter. But if you're not and you're going to get a bank loan, it does matter, and it only really matters 90 days before you go to get the loan. So what I say is, if you're going to go into the bank to get a loan, if you're going to go get an SBA loan, for example, you want to make sure that you have that proper amount of money, which is a minimum of 10,000, best case minimum of 70,000 over 90 days is going to give you the best rating. Now, a lot of other things you could do beyond just that. It also matters, again, when it comes to other factors. So there's a lot of other things that really tie into this bank rating and being able to get the rating that you need. Now, again, it really is coming down to a measurement of how responsible you are with managing your bank account. So you want to make sure you don't have insufficient funds, NSF fees. You want to make sure you don't have negative cash flow. That means you don't want to have more money going out of your bank account every month than going in, because they want to see positive cash flow. More comes in than goes out. You don't want to have low balances, especially at the end of each month. Okay, those are things that will be basically seen as irresponsible bank management, and that will really lower your bank rating as well. So it's a good idea for your business to avoid overdraft protections, avoid NSFs, avoid having low balances at the end of each month. And that's more than just your bank rating. Okay, this is looked at by a lot of alternative lenders as well. They're looking for the same thing. They want to make sure you have a bunch of transactions. They want to make sure that you're positive at the end of each month. You're not negative, that you have more money going in than going out. These things become very, very important. So the number of non-sufficient funds, positive cash flow, consistency deposit, having a lot of deposits regularly, the age of your bank account ties into your bank rating. That's why I told you to open that account early. The bank products you use. So the more accounts you have with the bank, the better your bank rating is going to be. So have a savings account, a money market, open a few different kind of accounts as well, because these type of accounts that you have are going to matter. It's going to calculate into your bank rating. Okay, so again, it's a good idea for you to have a checking account, a savings account, maybe a money market account. The more types of accounts you have, the better your bank rating is going to be. So in recap, this is what you need to do to make sure you have the best bank rating. Make sure you keep a minimum of 10,000 in your bank account over the 90-day time period before you go to apply for a bank loan, like an SBA loan. Okay, you always want to retain that balance over that 90-day period. You want to have more money going in the bank account than going out. Avoid negative balances at the end of the month and non-sufficient funds. Okay, and then take advantage of other types of accounts the bank has. That'll help your bank rating as well. Okay, and open that account as early as you possibly can and consistently make deposits in that bank account. All those kind of things will help you have the highest bank credit score you can have. So for more information on improving your fundability, getting yourself set up to get the most amount of money when it does come to get financing, well, give us a call. We'll definitely sit down, do a free fundability assessment to see how many of these 125 fundability factors your business meets to know if you have the best chance of going in and getting the money you're looking for when you do apply. You can go to 877-600-2487 or send us an email at info@creditsuite.com. If you found this information useful and you're watching it on YouTube, like the video, please, and subscribe to our channel. If you're listening on our podcast, and give us a great review if you don't mind. That's awesome, especially on places like iTunes. And then you can check the top right of our website at creditsuite.com, and you'll find that we do daily tips on Instagram. We do daily tips on Twitter. We go live every week on Facebook, and we go live on YouTube as well as having information available through even our podcast so you can listen on the go. And that's all available at creditsuite.com. Thanks, everybody, for tuning in. I will see you next Tuesday at 1 o'clock Eastern Time as we dive into more training on how to get credit and financing for your business.